Tesla's lead attorney is an ex-divorce lawyer, so I'm not making that up either.
Makes the firings easier.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 115 of the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On today's episode, the what and the why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation of news and the markets.
Yeah, crypto, nice little rebound. I mean, crypto's doing better than Sears is. Did you see Sears is closing their last store in Chicago, where it was founded? They're closing their last store. When are they just going to give it up?
I have a certain amount of nostalgia for Sears because of the Husky section, which is what I used to shop in. It was the Husky section when I was a kid.
What did Husky mean?
Husky meant fat kid. What?
Wait, those are the BMX bicycles you didn't want for the holidays, right?
Oh, I did have a Husky.
Huffy. Okay.
Huffies.
I did have a Husky. I just call it a Husky. I did have a Huffy.
Huffy Husky. Oh boy, this is off to a banner start already.
Yeah, I had to shop in the Diamondback or Mongoose section for my BMX. It's really far. It's really far.
Oh, that's good stuff.
So you have nostalgia for Sears, and they're closing their last store in Chicago. I'm surprised they haven't closed every store yet. Everywhere. So
one of the things about Sears' stock, and I haven't looked at it, so I'm talking out of turn, but one of the things that people used to say is that they're a huge landowner, and that the land is extremely valuable. So the stock had sort of a lower range that it should never be below.
What's that range, Bob?
I think it should never be below 0.
Because earlier this year it hit 199. It's now bounced up to 339. So it's what was that level? It shouldn't go below. Oh boy, yeah, that's I wonder. Oh, this is interesting. Let's compare Sears Holding, SHLD, and Apron. Oh, Apron low last week at 172. So Apron's Sears chart actually looks better than Blue Apron. Let's compare a company that's slowly going out of business to an IPO that's slowly going out of business. Oh gosh.
I feel like it's time to call Blue Apron as a consumer and ask them for some sort of deal before they go out of business.
No, won't they make menus like gruel and mac and cheese? Just like
the prison food?
Mac and cheese isn't prison food. I like me a good old bowl of mac and cheese.
If you serve it in a tin steaming pan and you let it get really dry and stuck to the bottom, and then you request the crispy ends on the bottom, it's prison food.
Can you make any requests for prison food? I mean,
it's a good question.
Can you request? Can I have the burnt ends?
That's a good question.
Oh, but prison's not about the food. It's about the people you share eating food with.
Never thought of prison that way, exactly. So we have a few things to touch on, though, in our follow-up segment. By the way, did you see at Stafford that Steve Wozniak deleted his delete your Facebook page, jump on the bandwagon, delete it.
Good.
So Steve Wozniak deleted his. But what
deleting a non-existent Facebook page, so I think I'm okay.
You're not missing much out there on Facebook. You're not missing much.
did
The funniest part about that testimony was hearing him try to describe the competitors to Facebook.
Yeah, the best part was him doing his best to not explain how Facebook works, because if people knew how Facebook works, they would shut it down.
You mean if the lawmakers knew, or people would stop attending it?
Oh, well, Facebook, records everything that you give them, and they can do whatever they want, and then they sell it. And most people don't know how deep that information goes.
Right. It cracked me. I mean, there was just so much about it are we getting into the testimony yet? Did we digress,
Sure.
Mike?
Go ahead. That's why I had to do a lead in.
So there was so much about it that was just, what's the word I'm looking for? Ridiculous. One of those things was listening to Mark Zuckerberg say, you own your information, you own your data, you own everything you put on Facebook. Yet he sells it and doesn't share the data with you. Now, obviously, that's a known thing. Okay, I'm not telling our listeners that this is something you didn't know, is that Facebook sells your information. But to say that we own it, and then to go out there and actually,
I got to correct.
Please.
The Facebook organization makes a record of all your data, and then they make an abstract of that.
Mm-hmm.
And from that abstract of the original, let's call it raw data, from the abstract, they make a conclusion. So,
this is interesting.
What the APIs did and the programs did before 2014 is they could grab everybody's front-facing information. And the fact of the matter is Facebook records all information, deep stuff. Like if you have the mobile app recorded on your phone and you run Android, it's doing crazy stuff and walking the memory pool and getting access to information way beyond that any app should be allowed access to. But Google's a crappy phone company, so they're very weak in their protection. So Google has all their front-facing info, and that's what the DNC, the Cambridge Analytica, the Deep State, that's where they got all the information from Facebook that was front-facing. That was like in 2014. That's been locked up ever since. The program can't do that. Walk the entire user table and grab all front-facing information. But Facebook records all the back-end information. But they don't sell that information. They make an abstract of that information, and then they sell their findings from that abstract. So that's how they keep their nose clean.
They generate a saleable commodity from your information.
Correct. Excellent analogy.
No, so essentially what happens is they take ingredients from you, and they create an end product, a derivative of those ingredients, and they sell that. So he is technically, via lawyer speak, correct that they don't sell your name.
They don't sell any information. They just sell the
derivative.
Right, the derivative, which tells them where can I advertise my barbecue pit.
Okay, so simplifying it down, it's very much like if the CME were to say we don't sell crude oil, we sell a derivative of crude oil called crude oil futures.
What's that future stuff you're talking about?
Yeah, exactly. Again, we're always going to sound like old guys, right? Saying the world is just messed up because they said that's not something that's not been said before. Elvis Presley's wiggling hips was going to lead to premarital sex. Well, it did, quite frankly. I mean, maybe there's not a direct correlation, but it did. The people who were complaining about Elvis Presley wiggling his legs on television were right. Facebook isn't, yes, they were. Facebook and all of this social media stuff is a nightmare, but the horses are out of the barn, the cat is out of the bag, the whatever else you can think of. There's no reeling this stuff back. It's just very 1984.
This is shocking to me.
It's not.
Actually, going to tell me the deep state's involved.
Here was one of the other best parts where Stafford goes to your point of everybody in the hearing, not just the members of Congress, but Zuck himself, trying to talk down to, or trying to seem dumb and kind of aw shucks, where Zuckerberg basically said that our privacy policy doesn't describe what we do because we found that if you make it too long, people don't read it. And we really want people to read what we're doing so they're fully aware of what we're doing. I mean, I burst out laughing. I literally burst out laughing that's what it is. Because the one thing where you have to scroll the page 3 times to get to the bottom and click I agree, everybody reads that.
And they're going to take over the world. That's why AI is the biggest risk we have, according to Elon Musk.
That's why I've already volunteered to go to Mars with him.
It's our biggest risk to our YouTube channel. Once they watch enough Mike's technical analysis, our game is up.
They're going to have a robot replace me. Hasn't that already been done? That was a pretty good one.
That was good, Mike.
But by the way, just a recap, because you brought up either last week or the week before, Stafford, Deutsche Bank, in my tongue-in-cheek going to zero segment that we've talked about. We haven't touched on Deutsche Bank for a while. But now S&P puts A- rated Deutsche Bank on credit watch negative. And they just replaced their CEO. This is their 6th CEO in the past 10 years.
You still on the going to zero bandwagon with them?
Oh, yeah. It's just going to take once the world goes into its next major recession, I say they're going to blow up.
Yeah.
Because they still got all their again, they'll get bailed out. So it's my facetious tongue-in-cheek zero. But they're on credit watch negative after replacing their CEO.
Right.
So that's just a follow-up. And Bob, did you see that this was hysterical? The CBO, or Congressional Budget Office, now forecasts. So they've done their forecast through December 2028, and we will not go into recession through December 2028, which would be 19.5 years without a recession.
So the other day I heard the CBO called the most trusted nonpartisan forecaster available.
Uh-huh.
No recession until when?
They've only done a projection through December 28, but there's no forecast recession at this point until through December 2028. So it could go beyond that without having one, but at least through December 2028, we will not have a recession.
But here's something else people need to know is those kinds of forecasts is very similar to a weatherman saying there's no rain because there's no clouds, and then clouds show up and they change it to rain. So this is completely useless.
I know it's completely, but that's what they're doing.
They're doing. Even put that out. It's just that's somebody who has a budget that he needs to spend.
No, but they're doing projections. First of all, you're doing financial projections through 2028. You can't even do it 2 years accurately. So forget this 10-year thing, and then you're actually making an assumption. Yeah, you might not know when a recession will hit, but to say we're going to go 19 and a half because the last recession officially ended June 2009. So we're going to go 19 and a half years without a recession. That would be the longest time in history by a factor of 10 years that we haven't gone without a recession.
Absolutely ridiculous.
Yeah, it's absolutely. So it's useless. It's like, yes, there's our tax dollars at work. Thank you. Crypto section. There wasn't much in the crypto. We've had a nice rebound this week. People should check out our crypto channel. We had a couple of bottoming patterns that worked, but the ICE CEO, Intercontinental Exchange, refuses to rule out trading cryptos on the NYSE. Quote, people trust Satoshi more than the Fed. I love that headline.
That's awesome.
Interview with Bloomberg this week, Jeffrey Sprecher, the chief executive of ICE, owner of the New York Stock Exchange, refused to rule out offering derivatives for digital currencies like Bitcoin. The reason? If people are willing to trust anonymous individual or a group of individuals named Satoshi Nakamoto more than they trust central banks, then this probably isn't a trend that major financial service companies can afford to ignore. Oh, it's classic.
Go ahead.
Actually, this has been. I was actually looking for a lot of other stuff this week, other than Tesla stuff, but it's been a banner week for Tesla. I guess they're coming in on earnings pretty soon because they've really been releasing a lot of stuff. By the way, if you can believe this one, the dual motor Tesla Model 3 possibly coming in July. I like that they put possibly. They can barely make 2,500 cars a week, and they're going for the dual motor, so they pumped that one out. By the way, they also, this was hysterical, they put out November 2019 for start of Model Y production, according to anonymous sources. So that was leaked, and then the Twitter blew up with people are like, no, not happening. This was just great. NTSB and Tesla got into a fight this week. It was even a public sort of fight. And Tesla said, we're not cooperating with the investigation anymore because we think this information should come out, and the NTSB isn't allowing us to put out this information. And then he accused them of leaking out the information, even though they announced stuff last week, that they say autopilot's not at fault and everything else. And the NTSB says, that's not what happened. We sort of kicked you out because of all the information you're leaking out. So they've going back and forth with that. Musk declares war on the NTSB. Quote, they're more concerned with press headlines and safety. I don't see the NTSB really going after press headlines, do you?
No.
I see Tesla going after press headlines. What else did he say? In the worst PR thing that you could ever probably do, because that Model X crash that the person died in with the autopilot taking it into the cement barrier, and now the family's looking to sue and everything else. So Tesla released this PR thing, a big statement, and one of the things, where is that line? Let me find that line. It was absolutely probably the worst thing you could say. Quote, we empathize with Mr. Hung's family, who are understandably facing loss and grief, but the false impression that autopilot is unsafe will cause harm to others on the road. NTS, blah, blah, blah. The reason that other families are not on TV is because their loved ones are still alive.
What?
Yeah, they said...
That's true. That's a great way to get on TV. I am all for that as a way. If you can leverage the death of a loved one to get some news coverage, I'm all for that. However, you don't want to. If you're Tesla, you don't want to say that. Oh no, you don't want to say that. No, you don't.
That's probably the worst PR move ever.
That's dumb.
The reason you guys are on TV is because your kid died in a car that we produced with our autopilot. That's the reason other people aren't on TV, because they're still alive. Oh, okay, not a good thing to say. Not helping your case, Tesla.
That's just poor. I get what they're saying.
Yeah,
but
that's just not really what you want to say.
Really poorly worded.
And then so I think Elon's feeling a lot of pressure because he's actually having Twitter meltdowns and everything else. He's getting into it with The Economist because The Economist published an article saying that I forgot what brokerage house or something said. Tesla's definitely going to have to raise money in the third or fourth quarter this year. They are just reporting what somebody else said.
They said they're not.
Huh?
They said they're not.
Yeah, I know Tesla said they're not, but The Economist reported that other people who were analyzing the company said they're going to have to raise money. So Elon tweets out, The Economist used to be boring but smart with a wicked dry wit. Now it's just boring. Sigh. Tesla will be profitable in cash flow in Q3 and Q4, so obviously no need to raise money. He's like going after The Economist, reporting about something else.
Fake news being attacked by a fake company.
So, and he's sleeping on the floor again in Tesla. which if your CEO has to sleep on the production line floor, that's the thing. Then you have bigger problems with just your production line. This is something I didn't put in the show notes, but I thought it was hysterical. There's one more thing on Elon because where is that? I have it. Oh, here we go. Elon, Musk calls Model 3 delay, quote, it's not a delay. It's now, quote, a time shift of up to 9 months.
A time shift?
Yes. You'll quote, this is a quote from Elon. You'll definitely get your quote. It's a 6 to 9 month time shift. That's literally it. And 3 of those months have already passed. It's just a time shift.
Perfect. So next time I'm late for something, I'm going to say, I'm not late. I shifted time. I just shifted time.
Okay, Doctor Who, you're still late. I'm writing you up.
He's literally going for the I am crazy at some point defense because obviously it's just a time shift.
That is just insane. It's a time shift.
I'm sorry. No, if your car's not being delivered for an extra 6 to 9 months, it's late. It's a delay. It's not a time shift.
Can I cost shift? In other words, you pay me?
Well, you should. They should pay you interest.
Give me half my money back, and it's just a cost shift.
Yeah.
It's like
God, if they're doing that with time, imagine their non-GAAP.
Yeah. Oh, I wonder, though, if he considers he can technically bail it out with his own money. So that way, if he did that, they wouldn't have to raise money.
Yeah,
I never thought of that angle.
You don't see him doing that. Speaking of your own money, Hank Paulson owes $1.5 billion to the government.
Wow.
I love that he has it. It's like,
$1.5 billion?
He owes $1.5 billion in taxes because he got accused of shifting profits out to lower tax years and lower tax circumstances, and the IRS said, "Nah, you owe us this." So they put the tab at $1.5 billion. And I've always wondered when someone is made about $15 billion, do you have $1.5 billion?
Is that a check you can just write?
I know. Do you have it in like several different FDIC insured accounts at 150 each?
You log into your Quicken and you put in your password.
Does he send a PayPal of $1.5 billion?
Can I PayPal you that to you? Can I Apple Pay that to you?
Can I sell you 100? Can I send you 100 million 1,500 PayPals? $1,500 PayPals.
Oh gosh, that's a tough nut to swallow. I don't care how big rich you are.
I know.
You owe us $1.5 billion. What? Oh, what do we have going on in the economy?
Can I get your wire information?
Yeah. What do we have going on in the economy segment this week? We had Fed minutes, didn't we?
We had Fed minutes, and the Fed seemed to say that even if there was a trade war, they're going to be fairly aggressive with, they're going to bump up the aggressiveness of the communications at least. 8 different Fed members said that they would probably look at a 4th rate hike for 2018. They all said that they see inflation picking up and coming faster for the most part. Let me find some exact quotes because there's a couple here that are interesting, and I actually put them into an article that I wrote this morning, so it's going to be fairly easy for me to find it. Hold on a second. Okay. Here was one that stood out to me the most. A number of participants indicated that the stronger outlook for economic activity, along with their increased confidence that inflation would return to 2% over the medium term, 2.7 year over year in this week's CPI, by the way, that it would return to 2% over the medium term implied that the appropriate path for the federal funds rate over the next few years would likely be slightly steeper than they previously expected. Now, when you take that statement and you put it to what was actually done at the last meeting, which was a 25 basis point rate hike and a jacking up of rate expectations for 2019, you can marry those two together and say, okay, they're not actually being terribly more hawkish now, right? They're really not. Also, another quote, participants did not see the steel and aluminum tariffs by themselves as likely to have a significant effect on the national economic outlook, but a strong majority of participants viewed the prospect of retaliatory trade actions by other countries as a downside risk. So downside risk, but yet the hawkish type language still remains. So it seemed to me that somewhere in the minutes that they did not record, they don't believe that there would actually be a trade war. They also use the word overheated again. So that's the second time since the Jay Powell tenure started that the word overheated has been used. The quote was, on the other hand, an overheated economy could result in significant inflation pressures or lead to financial instability. They also saw a significant boost to outer output over the next few years, significant boost to output over the next few years from the tax law. So again, hawkish, but hawkish down the road. Traders are starting to price in slowly, not in any drastic way, but they are starting to price in a fourth rate hike in December this year now. Whereas prior to that, we were looking at September and then possibly sometime in like the June, July period.
What are the current odds of a June rate hike now? Because I saw earlier it was like up to 85%.
CME Fed Watch Tool is where we go for that, ladies and gentlemen. Go to the CME Fed Watch Tool. And 85, whoa, wait a minute. No, that is the current target rate for May. So let me go to June. June 18th, 89.6%.
Okay, so 89%.
Yep.
Wow. And other, did Kaplan
58.9% that one happens in September.
What, 58.9?
58.9 and 29.7 now. That one happens in December.
Wow. Yeah.
That's up.
Now, if they do all four hikes, are we going to invert?
Well, we've already started to invert at the very, very front end of the curve in like 1 month interest rate swaps. But theoretically, yes, because if inflation doesn't show up, you won't get that move in the 10-year note, 30-year note, even the 2 and the 5. So yes, it has a chance of inverting. The curve actually went from about 70 basis points back to about 50. I do not know where it is today, but I can take a look while you're talking about other stuff.
Because earlier this week, Kaplan came out and with the history of inverted yield curves is not positive. They're watching the U.S. yield curve very carefully. Flatter yield curve means GDP growth outlook sluggish. He came out and said that earlier in the week. Man. And then today, Rosengren said he sees a risk of rates back at zero in future recessions, although he should rest comfortably because the CBO doesn't project one for at least the next 10 years.
Yeah, that's not matching up. Those two things are not matching up.
So, yeah, Rosengren says he sees rates going back to zero in future recessions. So, interesting. They're starting to pepper some stuff out there about the yield curve and rates going back to zero already.
Yeah, so let's see where the yield curve is today. Let's go with the 2s to 10s first. All right. 2s, 10s is 49. So we've broken 50 on the 2s, 10s.
The basis points.
Yeah, 49 basis points, so a half of 1%. And the 2s, 30, which is the other significant one, is 71. So that's not flat. So, for example, yesterday, the 2s, 30s. All right. Today it's at 71. And yesterday it was at 67. So that's actually flattened or steepened a little bit. Yeah, but the 2s, 10s is the one you want to watch. That's the most reliable predictor. Well, that one is definitely flattened a touch below 50 now. It was 52 the other day. Now it's 49.
That's one we'll keep watching.
Yeah.
And they're watching it, obviously. Obviously. Anything else in the U.S. economy segment that caught your eye this week?
No.
Not really for me either.
CPI was as expected. The month-over-month CPI came out negative on the headline. It was expected only at 0.1, but it came out as negative 0.1. But then the year-over-year, both core and headline came out as expected, 2.7 and 2.4. So people are really focused on the year-over-year more than anything now.
And now, how about in the International markets, anything caught your eye?
I forget which country it is, Mike. Oh, the UK.
How can you forget the UK?
Okay, so yeah, the UK caught my eye in that they called for sort of a national security meeting to deal with the supposed gas attack with Syria and Russia and the tensions from that. And the reason it caught my eye is that's not like a national security advisors meeting in the US. It is a big, big deal when it happens in the UK. So I personally don't believe that attacks on Syria have anything to do with the equity markets, certainly not the energy markets. There was one commentator I heard say that oil was up because we might attack Syria. Syria in 2014 did just around 1 million barrels a day in crude oil prior to 2014. By 2014, they were down to 140,000 barrels, and they've kept that level ever since. And that's about when the conflict started. So Syria, to me, unless it spreads in a meaningful way to Russia, which I don't believe it will, Russia being the largest producer of oil right now, of crude oil right now, there's no direct Syrian connection to crude oil. The geopolitical risk that's affecting crude oil more than anything to me is the Yemen situation where they're firing missiles. The Yemenis seem to have miraculously developed better weapons technology, tongue-in-cheek, of course, where they're actually firing missiles into Saudi Arabia and at Saudi Arabian targets. So far, all of them have been intercepted by Saudi Arabian defense forces except one, which hit a tanker carrying crude oil, but didn't do enough damage to where the tanker could not reach its destination with its payload. So that's more of a risk than Syria is. But the UK calling a national security advisory meeting was something that kind of shook the British pound a little bit because, again, it's a much bigger deal than it is here. But in terms of, there's been mixed European economic data lately, not a whole lot coming out of the ECB, except for Jens Wiedmann, who is president of the Bank of Australia and is an ECB board member. He has said that normalization is becoming more appropriate. But that was really sort of a one-day move in the euro on that, but that's about it.
Well, there you go. That takes us to, is there any quick update on crude? I mean, crude.
Yeah, I just kind of did it. I mean, just real quick. Actually, I'll do crude as my why.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Because we had that potential double top, which is now turned into a triple top, so that's invalid. And my upside targets now for crude. We just hit the first one, actually. 67.75 was the first one. We just hit 67.76, and the next one is 68.83.
Yeah.
For upside targets in crude, coming off the weekly rotation zone very, very nicely. So the crude's still acting strong. When's the last time we were up this high? Well, it's been a while.
Last year.
Let's see.
This is 2018 highs right now.
This is 2018 highs. The last time we were trading at this levels was back in November of 14.
Yeah.
Wow. So I haven't seen this price action this high in quite some time. So what you wanted to do your why then?
Yeah. So why is crude oil going up if shale is producing so much? And that's essentially what I want to discuss. And I'll do this one real quick because I've talked about it in other podcasts before. But essentially what's going on is WTI crude is shale, Brent crude is OPEC. Okay, that's the delineation. And WTI is what North American, Western Hemisphere crude pricing is based off of. Essentially, shale is producing at a record pace in terms of total amount of barrels per day. But the most recent upping of that estimate was by 65,000 barrels. And that's well off the pace of what it was doing when shale first started to hit the scene, 2012, 13, and 14. They were upping 100,000 barrels a month easily. Their CapEx is only at about 54% of what it was in 2014. Their use of services, which would increase the price of the oil they produce. All right, their use of services companies is way down, which is why the stocks in the oil services sectors are just starting to pop. They had not been running up along with crude oil. This describes a more efficient and a tighter belt in the shale patch. So they're producing, yes, but they're producing at a more responsible pace, a more sustainable pace. So that means that the OPEC cuts are actually working. We've got crude oil stockpiles now down below the 5-year average. We've also got the overall stockpiles down about the 40 million barrel a day handle, where prior to that it was over 100 million barrels a day in the glut, what everybody calls the glut. So this is part of the reason that crude oil is still going up. And on top of that, you've got OPEC offsetting shale, but we've got Venezuela in an absolute free fall in terms of their production. You're talking about a 3.5 million, sometimes 3.6 million barrel a day country that is just falling apart because of just economic turmoil and strife and political strife that's causing the economic strife. So they're not able to produce anywhere near what they were. And the crude oil they're producing is the heavy crude, which is more in line with Brent. And even Brent is lighter than that. This is not crude that's very useful. It's also not very profitable. It's easier to get out of the ground, but there's less desire for it. So it doesn't help them with their financial problems at all. So you've got Venezuela and OPEC offsetting by a lot what the crude oil that's coming out of the shale patch in North and South America. So having said all that, crude is, and the demand for crude, by the way, continues to rise as the global economy gets stronger and stronger. And then you add to that weaker dollar and seasonality, and the crude oil run to the upside is by no means over. We've been saying this as a company. I've been saying it myself for a long time now. If you listen to the podcast, you've heard us say this before, that there will be short-term sell-offs. We will trade the patterns that call for a short in crude oil. But the medium term in crude oil is still up. OPEC is rumored, according to Bloomberg, to want $80 oil prior to their Aramco IPO. That Aramco IPO is all set. They're just waiting for the right price of crude oil to IPO the company. So if they want that $80, there's going to be no relief out of OPEC anytime soon. The one wild card is Russia did produce at a record pace last month, 10.9 million barrels a day, higher than what they agreed to produce. But that could be technical factors. We don't know if that's a pattern with them yet, of them sort of like kind of, detaching themselves from the international stage out of anger and saying, screw this, we're going to produce what we want. So crude oil upside looks likely. That's my why.
Pretty good. I have a what?
What's your what?
Inverse head and shoulders pattern, a little sloppy on the S&P E-mini futures.
Go on.
This would be a modified trade because we got the 50 exponential right in the way of this. So I'd need a close above about 2680 level instead of a close above 2665 roughly. Then we'd be targeting, this would take us to the end of the last major sell-off, the end of the candle bodies. Full target would be 2786. So it would take us back to the 2700 level, but it is not triggered yet. So it is slightly sloppy, but it is a very interesting pattern that, could be traded with even a nice call spread.
There you go. Find us a good call spread for next podcast, please.
Find us a good call spread. So I'll have to call that up. That's my what. So we'll see if that would be a short-term bottom, and then we could see that could rally for a few days. But again, not triggered. We have to wait till they trigger. Can't front run them because
for a trigger.
we saw a lot, especially in the crypto realms, we saw a lot of potential doubles that did not trigger, and we saw actually the couple that did that got stopped out, which is a rarity. But you had to wait for the trigger, because if they don't trigger, the sell-off can continue.
Hey, in the breaking news segment that all three of us will be angry about, according to Bloomberg, just one alcoholic drink a day can shorten your lifespan.
Okay, what about 5? Is that
five shortens it to a desirable level.
I'm not buying it.
That's what it says. One a day. What are you gonna do?
One a day?
It's bad.
All right. Well, who came out with that breaking news?
It's on Bloomberg's Twitter feed.
Bloomberg.
I'm not going to entertain this fake science. We are not a fake science channel.
Yeah, but if you're in the big three, you've got to watch yourself. You know, what is it? Alcohol, tobacco, and firearms. If you're in the big three, you can't even do the big three at the same time.
What? Drink, smoke, and shoot?
That went out in Hunter S. Thompson days.